Hi everybody, this is Mr. Edelman here with another screencast. Today we're going to spend some time together learning how to track our investments that we've made last week in the stock market game platform. Now, one thing I want to spend a little bit of time talking about before I show you how to do those tasks is I got an email from a student in our class yesterday saying, Mr. Edelman, I made my investments in the stock market game, but when are you going to teach us how to play the game and to sell our investments? And that's a really, really good question. So the way I responded to that was investing is never a game. And if you're investing responsibly, you should never be selling your investments short term. So again, our essential question for the unit is to what extent is investing gambling? And so if you're doing things like buying and selling stocks on a daily basis and not holding on to them long term, that's gambling because any given day your stock value can go up and down. So especially if you've been paying attention to the markets now, there's a lot of volatility in the markets. But the shorter term, the more volatility. Let me show you what I mean by that. So this is through Google Finance and the stock symbol AMZN for Amazon. This is one of the stocks that I bought in the stock market game. Okay, and so this is their stock price since the company first went public and people could buy stock in it, which was about in 1999. You can see this line goes all the way back to before 2000. And you can see when the company first launched, actually it was, you can see up here in August 1st, 1997, their stock, you could buy a share of Amazon stock for $2.42, right? You can see that like right up there, like $2.42. And then you can see over time, right, there's been fluctuation, but generally when you're talking about long term, there's been the trend in this line has been increasing to the point that now if you wanted to buy one share of that same stock, it's going to cost $2,356.95. So that's almost or close to a 2,000% increase. Not bad, right? Not bad for a $2 investment, right? About 20 years ago, you would now get over $2,000 for that. So that's what I want you to think about. I want you to think about what could you invest in now? What companies, what industries could you invest in now that are going to be valuable 10 years from now, right? If you think that either the nature of the world is going to be at a place where this is going to be something that's going to be valuable 10 years from now, that's something that you want to invest in. If it's not, then that's something that you probably want to stay away from. So this is the reason why we don't want to buy and sell stocks on a regular basis, on like a day-to-day basis or hour-to-hour basis or even a month-to-month basis. Let's look at 6 months. Okay. Let's say you decided you wanted to invest in some Amazon stock. Okay, and you bought it like right before March. All right. Now we know that the economy is in a real slump, right? Even though Amazon's doing well overall, initially, due to the shock of the pandemic and people losing confidence in the economy, rightfully so, you can see that their stock price took a dip, right? This is right around when we got news of the pandemic, right? Spreading from China to other countries. So here you go. So you could see, like, if you bought the stock here and then the stock price went down, right, and you got scared and you sold it, you would have lost money. It would be better for you to hold on to that investment, even if it went down. Hold on to it because eventually it's going to go back up, right? And if you followed that same advice for many years, you would have a tremendous increase on your investment, okay? So I know that was a long way of answering your question, but you don't want to be buying and selling stocks on a regular basis. And so for this game, I would like to call it a simulation because investing is not a game, it's serious, right? You don't just throw your money down and buy things and sell things randomly. You want to be strategic and you want to be responsible and decrease your risk. You don't want to be buying and selling stocks on a regular basis. You want to make some investments and hold on to it, even if there's some fluctuations, right? So we said even if there's some fluctuations in the price, you don't want to um, act too quickly. You want to swallow that scared feeling, especially now. People are going through some scared feelings with the market, and wait it out. Because, again, when we looked at historically, long term, the market in general is at an incline throughout time and typically returns anywhere between 7 to 12% long term. So that's what we want to do. We want to be responsible investors and we want to invest long term. So let me show you my portfolio in the stock market game and also show you what you're going to be doing this week in regards to your assignment, which is going to be on tracking investments. Okay, so this is the exact assignment that I'm going to post to Google Classroom that you're going to complete. I'm going to show you how to complete some of the tasks. I'm going to put my data in here and you're going to do the same thing with your investments that you made in the stock market game platform. So the first thing that you're going to need to do, it says that you're going to need to look at your unrealized gains and losses chart. And the way that you're going to do that is you're going to log into the stock market game, you're going to go to your portfolio, account holdings, and you're going to copy and paste your information below. So I've already logged in, right? When you log into the stock market game, this is the first thing that's going to come up, right? And you can see here overall, based across all the stocks I've bought, how much money I have invested in stocks. That's, again, money invested that you become an owner in an individual company. Mutual funds, which you gain ownership in a pool of companies, so it's inherently diversified. And then we said we have 3 different types of bonds. We have treasury bonds, right, or T-bills. That's a loan to a government. A municipal bond, that's a loan to a city or township. Or a corporate bond, which is a loan to a corporation. But unlike a stock, when you buy a stock, it makes you an owner. If you buy a bond, it doesn't make you an owner, it just makes you a loaner. You're loaning money to that company. And again, if you loan money to a company, you get a guaranteed rate of interest back, so maybe like 5% back, versus, again, your stock, the value of your stock is going to fluctuate depending on people's desires to buy it, right? So there's nothing inherently concrete or tangible about a stock price. It could go up or down, as opposed to a bond, right, which you're guaranteed a certain amount of money back, as long as the company doesn't go out of business. So the risk is the least for a bond, somewhat in the middle for a mutual fund, because again, it's a group of companies. It's not just one company. So you're not putting your eggs all in one basket. And the most risky investment is a stock, because you're putting your eggs in one company. If that company does not do well or goes out of business, that's going to be unfortunate for your investment. Okay, so again, you're going to go to portfolio and account holdings. I think I have to, wait, let's see. I'm sorry. Unrealized gains and losses. I have to log back in. No problem. It'll log you out. Portfolio, unrealized gains and losses. One sec. Okay. Where did it go? So the first thing I just want to show you, I just went to portfolio account holdings, is this is the breakdown of all the investments that I've made, right? So I have about half my money in stocks, about 15% in mutual funds, 25% in bonds, and I still have some cash left. Okay, and these were all the things that I asked you to buy. So I have my three stocks right here, my municipal bond. Anything that ends in an X over here or begins with an F is my mutual funds, right? Because I bought them, they're Fidelity mutual funds. Amazon, that's a stock. CO, that is a corporate bond. And then if you click over here, you can see both of these are treasury bonds. Okay, so those are all the investments that I've made so far. And so one of the things I wanted you to see was unrealized gains and losses. So what this means is, since I made this purchase to my portfolio, which was just a few days ago, how has that investment done? Has it gone up or has it gone down in value since I purchased it a few days ago? And again, we don't want to be too concerned with this number. It's hard not to look at it because we want to know in real time what's happened. But again, we want to just be invested for long term and not necessarily focus on what's happening day to day. But if you take a look at this, anything in red with parentheses, when it means you're in the red, it means you're losing money. So for anything that's listed from here all the way down here, those investments have decreased, not by much, right? You can see the percentage wise below. So this is like below 1%. This is around, it lost about 2% of its value, okay? As opposed to something like this went up $540 or 3%. TDoc, this stands for Teledoc. It's a telemedical company. So especially now, people want to speak to a doctor, but they don't want to actually go to a doctor's office. So you could get healthcare and advice from a licensed practicing doctor over the phone, right? So that's Teledoc. And as you can imagine, that company is getting a lot of attention right now. Teva, this is a pharmaceutical company. In the past few days, it also went up a little bit more than 1% in value, and that's equivalent to $29. Okay, so this information, what I'm going to ask you to do, you're just going to highlight it, Control C, and then you're going to go into your assignment, and you're just going to paste it right here. Boop, that's it. Okay, and again, if your investments, if you made perhaps more investments that fit on one page, you could do the same thing. Right, just highlight and paste that information here. Okay, so unrealized gains and losses, right? That's the information that's in the column. Just so you can see and I can see all the investments that you made when you made them. How much did each cost, right? What's its value? And since you made those investments, how have they done? Have they gone up or down in value? Okay, the next thing that you're going to do is you are going to generate a stock chart and you're going to compare it to the index fund. And it says right here, you're going to click on here, you're going to go to Google Finance, and you're going to use that site. So that was something that I already had up as well because we were talking about Amazon's stock price, right? So it's on finance. You want to look up, let's look up another company. Remember I was telling you about Teledoc? This is a stock that I actually own in my real portfolio. So let's look at how this stock's been doing. So if you look just based upon one day, so yesterday, right, it looks like, oh, yesterday, this stock really wasn't doing well. It went down in value, but that's just one day, not so important. Let's click max, okay? And you can see that perhaps this company went public in around, what is that, 2015, July 2015. I bought this stock kind of right around 2019, right? And you can see since then there were some ups and downs, but look, when I bought this stock, it was about $44 in value. And now it's currently one share is worth $184.15. So when we're talking about a larger time span, again, a year, this is a stock that's doing quite well. Okay. Um, so what you're going to do is you're going to put it at 5 years for the sake of our assignment. Because often you want to hold on to a stock or any investment for at least 5 years. And you're going to take a screencast. This you can't necessarily copy and paste, so you can just do a print screen. I press print screen, or you could take a screenshot of it and you can paste it here. But oh, I almost forgot. There's one other important thing that you're going to do. I want you to compare this. So you're going to click compare against the S&P. I'm just starting to type S&P and then 500 comes up because this is something that's very, very typically done. So this S&P 500, it's kind of like a mutual fund, but it's known as an index fund because it gives you an average for how the 500 top companies in the United States have done overall. So you can get an average of how the stock market's doing. And the real benefit of doing that is you can take a look at how is your stock doing compared to the average, right? So like for instance, here, look, not too long ago, the market tanked, right? This was pandemic time. But what happened to Teladoc? And this shouldn't be very surprising that during a pandemic, a company that allows you to communicate remotely with your doctor is going to do well, right? When the market crashed, this stock did very well, right? So it's right now, actually, since about 2019 when I bought it, it has been performing the market. The market's kind of very level, it drops off, and Teladoc is increasing exponentially over here. So that's a good sign. So now let's take our print screen. I'm going to press print screen, or you could take a screen grab if you're using your phone. You're going to go back here, and you're going to paste that in. Okay, and if you want to just manipulate this so you can pull off the top, you can. You don't necessarily need to do that. Okay, you are going to do this. Again, you had to make at least 3 stock purchases. So you're going to make a chart like this for your 3 stocks, just your stocks. You don't have to do your mutual funds. You don't have to do your bonds. You actually can't because, again, bonds don't work like that. Bonds, there's no fluctuation in price. You just, again, you're loaning money and you're getting a standard rate of interest back. Okay. And the last thing that you're going to do is you're going to look at some company news. So again, you're going to go to Google Finance. You're going to search your 3 stocks by inputting the name. And then you're going to look up at what some basic news stories are. So the way that you're going to do that, let's look at some news related to Teladoc as well. You can just click news. And I'm just going to have you, let's say, take like 3 or 5 stories, just the headlines. You can highlight, copy them. And paste them right in here. Okay? Just the headlines to give you an idea of what's going on in the company. I suggest, you're going to read through these as well, right? Skim them, get an idea of what each article is talking about. But I want you to paste the headlines into our assignment. All right. And again, you're going to do that for your 3 stocks. I just did 1. You're going to do that for your 3 stocks. And then after you do those 3 research skills, looking at unrealized gains and losses, generating your stock charts against the S&P 500, and finding some news about each stock, right? You're going to complete some reflection questions that is going to require you to analyze this information, right? So you're going to look at your unrealized gains. Since purchasing, to what extent has your investment gained or lost value? So we talked about the fact that most of the investments since I made just a few days ago have lost value, right? But actually, it hasn't been all that much. And just this one Teladoc stock has increased 3%, and that was equivalent to about $540. And that kind of outweighs all these other losses, which is a good thing. That's why you diversify your portfolio. So if some investments aren't doing well, hopefully there's an investment that is doing better and that it will offset any potential losses. So that would be a good answer to put down for the first one. Look at your chart. How have your stocks been performing as compared to their 52-week high and low? Well, for Teladoc, we know just by looking at this chart that it was doing quite well, right? It's the highest it's been. But if we want to look at the 52-week high and low, you can look right over here. So the low it's been in 52 weeks is $53, and the highest it's been is $2,003, and it's currently at $184. So it's much closer to the high than it is to the low, but it isn't the highest that it's been ever. Okay, so that's a good way to answer that question. Look at your company stock price against the index fund. How have your investments been performing compared to the market average? Let's see if I can get this big again. So again, this is the market average. This is Teladoc, and you can see when the market average is about flat, Teladoc is going up and increasing. There was a dip, but there was also a dip in the S&P 500, and now the S&P 500 is kind of flat again, and Teladoc is increasing, right? So it's know that it's outperforming the average based upon its comparison to the index fund, the S&P 500. And then look at some news stories. How would you describe the publicity the company's been receiving? How do you think that this will continue to influence the value of the company's stock? To what extent do you expect the company to be profitable in 10 years? So I do think telemedicine is going to, it's not going away. If anything, this is a new industry. And it's actually the only company that is publicly traded that you can, in telemedicine, that you can invest in right now. So that's a good thing, but at the same time, there's probably going to be additional competitors and also competitors that, again, go into the market and start selling shares on the New York Stock Exchange. But let's see, if we look at some of their headlines, they seem pretty positive. Reported earnings last week, and analysts are already upgrading their estimates. So that's a good thing if you're invested in the company. Revenue, that's how much money the company is making, is surging right now. Shareholders have reason to smile today. Analysts are making substantial upgrades to this year's forecast. So kind of experts in all things investing think that this is a stock that's on the rise. Shares in Teladoc leap 8% on Monday. In one day, actually. Oh, that was because they bought another company, which increased their hold of the industry. And in that one day, their stock prices went up 8%. Okay, so those seem like some promising headlines. Hope if you're considering investing in that company or you have already invested in that company, so you could use that information as evidence to complete your response to that question as well. So again, this is just one thing that you need to paste in. I'm sorry. So the first task that you need to do, the unrealized gains and losses chart, that's just one, right? That's all your investments. And then again, for the stock charts and the company news, I just did it for one, but you're gonna do that for your 3 stocks that you purchased. And that's it. And those are the tasks that you need to complete for tracking investments. And you are on your way to becoming a responsible investor. and ensuring your money is growing for you. If you have questions, let me know. I'm always available every weekday for office hours, and I'm happy to help. Take care. Be happy. Be healthy. Let's continue to learn together.